Hello, everyone. Hope you guys are staying safe at home with your family members and also using this time best to actually bring your family closer, have a good time with them, can cook and everything, right? So anyway, my name is Surendran, okay, from MCM. And today we actually want to share our strategy, okay? Normally we talk about this property investment life cycle. This is the strategy that we have been used throughout the world, all right, in many countries. Let's go into the presentation. Let me share the screen to you guys and then we can start the presentation. Okay, before we go further, okay, explaining about this, let me ask a favor from all of you to actually follow us in our social media. Okay, so basically we have our MCM Facebook page, and we also have our MCM Instagram, and also our YouTube channel and our LinkedIn. So if you guys want to follow and get more updates, please go and follow our social media pages. All right, and another thing, right? Okay, so basically MCM also, we also start like a normal investor, which is like all of us here. We also start to invest into a few projects and then slowly learn and then started to invest globally, and the group going bigger and bigger. And today we are a community. So we are here not an investment guru, but a global investor. Okay, so today we are also not selling, so sit back and relax. Okay, and our motto here, if you guys can see, now everyone can invest globally. Okay, those days people tell me want to invest globally is something that I never think of. But today with MCM, I actually did also invest in a few countries in a few projects. Okay, and another thing, from a small group of friends, and then it slowly grows. And today we have more than 5,000 members. Okay, and we invest in more than 10 countries already. Okay, and the content of this presentation does not reflect the official opinion of Max Capital Management Holding Limited. Responsibility for the information and views expressed in the presentation lies entirely with the author. So basically, this one is actually from our experience, right? So we have learned from investing in a few projects in a few countries, and from the feedback from our community and for our board of governors as well. So we make our investment decision that way. So if it might not be suitable for you or anyone, right? So you have to learn also how to do due diligence. That's why we are doing a lot of this education seminar, so all of us can learn. Okay, and another thing is I would like to request also, please do not record and or this seminar. All right, now let's go to the presentation. So hope you guys can see the screen already. My name is Surendran again. Okay, nice to see you guys. Okay, so this MCM, PILC, and BILC strategy, what is this and why is it so important? All right, so basically we have been using this for quite a while already, and it's actually founded by our founder, okay, Professor Max Shankar, into investing into property and businesses worldwide. Okay, what is this PILC first? Let's go into the slide. All right. Okay, PILC means Property Investment Lifecycle. And if you guys can see here, right, this type of strategies in PILC. So basically we got this 6 strategy, okay? So basically we are using different strategy in different countries and also in different economic or conditions, all right? So the first one will be the land acquisition. It's also like a human, right? It has this life cycle. So in any beginning of this property, there's always this land, all right? So land is actually also called as the raw material. All right, so from land acquisition, and then you go to the construction or development, and then you go into management, renovation, refurbishment, and redevelopment. Okay, I'll explain further about all this strategy. How are we using this into investment? Okay, so the stage 1, if you guys can see here, is actually the land acquisition. Okay, the strategy here, if you guys can see, we are actually buying the land at an attractive price, add value to the land, and also sell to the prospective buyer. Okay, some people call this land banking as well, right? So during the holding period, so it's either just buy and sell the land, or you guys can see during the holding period, so those who wish to keep the land for long term, okay, they actually can use it to generate cash flow as well by doing agriculture. This one you guys can see all these big developer, for example, Sime Derby in Malaysia. So you guys can see they also have this plantation. Are they really into plantation business? All right, we also can actually figure out. Basically, they just buy the land, wait for the right time for them to do the development. right? And then those who wish to add value and sell the land also can convert the agricultural land, okay, into a commercial or residential or industrial land, and then JV or develop the land to suit the market demands on property at the location. So for example, they actually buy this particular agricultural land, right? If that area have the need of more residential properties, they actually can work together with a developer to convert the land into a residential and build a residential development, all right, to meet the market demands at the location. Okay, now we go to the second stage. Okay, basically the construction or the property development. All right, so the strategy we are using here is basically we're going to JV or develop the land to suit the market demands on property at the locations. So basically, you guys can see that if you want to do development, say normally there is a lot of huge, capital involvement and also expertise required. Especially there's a builder, there will be architects, there will be land surveyor, all right, there will be people who do research, what kind of property need in that place and whatnot. Okay, so basically we are also managing and managing building costs and also choosing the right contractor and partner. Okay, this part is also important because the builder or the contractor is the one who actually going to build the property, and doing it right actually can with the right aesthetic value and whatnot actually can give more value to the property. And then on the other side, if they are not doing it following the protocols and also the rules and whatnot, and it might also jeopardize the property value. Okay, and also if you guys can see the market study on the type of property to suit the potential buyers. Okay, so if let's say we want to build a residential property, what kind of need of the property in the market? You guys can see some of them might need a landed property. Some of the area is better if you build a condominium. Condominium also got different sizes. Maybe a big duplex condominium is suitable for this luxury area, or maybe a small Soho or a small studio unit is suitable for this city area. All right, and then you guys can see the marketing strategy also is also important. Okay, so basically we need the right person or the right party to come in together to sell the property as soon as possible for us to realize the profit. Okay, now we go to the third stage. So basically the management part of it. A well-managed and maintained property further increase the price and will yield higher return. All right. Of course, there is two part of this property management. So basically, it's either we manage the building, all right, or we do a management of the tenants. Okay. So building management requires a professional team and also license to operate, whereas the tenant management just need an experienced team with resources to provide good service to the prospective tenants. All right. And then you guys can see they decide the best strategy to rent the property to the right target market. Okay, so we also can see when let's say we are not doing building management, we're doing tenant management. So we actually need the right strategy. Okay, what kind of property needed by the tenant market in that particular area? Okay, is it if it's a place with a lot of tourists, we guys can plan to do short stay like Airbnb and whatnot. If let's say there's a lot of working people, okay, those people coming from the village to the city, and they have a lot of working people who are working in the city, so maybe it's room rental is suitable for them. If that place got a lot of colleges and university, student accommodation will be good for them. All right, and also expats and whatnot. Expat will look for more luxury property. Okay, and then you guys also can see the strong marketing team to continuously provide good tenants. Okay, sometimes the property is quite good and everything, but the team is also very important. Okay, so we have to see like must have a good marketing team, for example, like agents and whatnot, to continuously provide the tenants for us. Okay, and then after we do the building management, now we are looking at this renovation stage 4. Okay, stage 4 we are looking at this property, which is if you guys can drive around your taman and whatnot, right? You guys can see there is quite a rundown property. Even in auction, sometimes rundown property cannot really sell because people cannot buy and immediately stay. They require a lot of funds for people to put in before they actually can stay into the property, right? So basically, you guys can see the strategy here is to buy a rundown property, improve the aesthetic value. What is improving aesthetic value? Basically, we just add some makeup on it, okay, and the functionality of the property, and also sell to the prospective buyer. Okay, so basically, a little bit of makeup actually had improved the value, increased the value by a lot, right? So if you guys can see, a lot of people those days, you guys can see they buy these old bungalows or all single story or double story house or family houses, okay, and they just do a lot of makeup, do a little bit of makeover of the house, and they can sell for a very good price in the market, okay, and adding this aesthetic value to suit the need of the market, and also we also need a good design skill and a good designer. All right, so it might cost a lot. So if you have the skill, some people they have this natural skill of this interior designing, right? They know how to choose the wall color, they know how to add in the furnitures and whatnot. That is actually a plus point for you. Okay, and choosing the right long-term vendors also plays an important role in managing costs and to reduce hiccups. For example, you know this particular contractors or interior designer for long term, you know what kind of product they're going to deliver, what kind of results they're going to deliver. And also, if you're working with them for long term, then they can actually give you a better discount and whatnot. Okay, and be aware of this country tax system to calculate the gain post disposal of the renovated property. Okay, in Malaysia, if you guys notice, right, there are also this RPGT. Okay, so if you guys must make sure you guys are well calculated all these factors into your planning. Okay, before you actually dispose the property, so you know how much you guys need to spend for the tax and whatnot. Okay, and then the next stage, if you guys can see here, is refurbishment. So the strategy here, to buy a historical or non-occupiable building and do a total makeover to improve the aesthetic value and the functionality of the property and sell to the prospective buyer. Compared to the one just now. Just now we do renovation, right? So refurbishment, we are talking about historical building or heritage building. For example, for some property in Penang, for example, or in Malacca, there is a very old building cannot be occupied anymore. Okay, this kind of building, so basically we are going in and do a total refurbishment, the internal, and then change the functionality. Maybe it was a pre-war building, we don't know what the function, right? So we can convert to a shop plot and whatnot. If you guys can notice, nowadays in a lot of cafe also are very smart. Okay, they also use the heritage, they remain the classic exterior and whatnot. They just do a little bit of makeover and make it a very classic look cafe, right? So what are the things that we need to take note is basically refurbishment, all right? They need a more complicated job and there might be a structural change in the building and also on the function of the building. Okay, to improve the function of the building, we need to study the market need and also demand at the area. Okay, whether that place is more suitable to do commercial or is it more suitable to do residential and whatnot. Okay, and number 6, okay, this is another big segment. If you guys can see the strategy, basically we're going to rebuild a property affected by natural disaster. Okay, for example, fire, and sell or rent to the prospective buyer or tenant. Okay, so redevelopment, we are talking about those property affected by natural disaster. Basically in Malaysia, we don't have so much of natural disaster. Okay, but this strategy that actually normally be used in different countries. For example, our example actually we did in New Zealand after there was an earthquake. Okay, so maybe the structure is even the structures are affected. So sometimes you might need to tear down the whole building and then build again. All right, and for redevelopment, okay, we might need require the tearing down of the whole property and build a new property at the land to suit the current market need. Okay, so the studies need to be done if the location is still fit to build. All right, and building fit to build and the market need for the current property demand. For example, if let's say the government are now saying that, okay, this area cannot be built anymore, so there's no point of us building, right? Or they might actually put in some factors. For example, you can build this property in this land, but you must have a earthquake resistant structure and you only can build up to 1 floor or 2 floors. Okay, we also can build suitable for that kind of specs and whatnot. And extra safety precaution need to be taken to avoid damage from similar natural disaster in future. Okay. All right, so these are the few factors that normally we take note before deciding to implement this strategy. All right, so the first one, if you guys can notice here, location, location, location. Okay, this has been our mantra, right, in investment in property. So make sure the right property that you are buying or using all this strategy, the location must be right. Okay, and the second one is actually the demand and supply. Okay, whether we have enough demand in that particular location or not, or are we over supplying the market with a similar type of property or not. Okay, and then the population density, whether more people are already in that place, and are there chances we have more population flowing in that particular location. Okay, the demographics of this particular property, the location, and then the infrastructures of this property, and also this particular thing that we also take into factors, the political stability. Okay, sometimes the political stability is not really strong. People might hold back from buying property as well. Okay, and there's another thing, this economic condition also have the similar issues. Sometimes when the market is uncertain, people also hold back from buying property. So we also can do rental property. So if people hold back from buying, people might want to rent, right? And then the taxes, like I said just now, and then the segment of this property, whether we want to use the residential property, industrial property, or commercial property and whatnot. Okay, and number 10 is the strength and experience of the developer, builders and contractors also plays a very important role. Like I said just now, they are playing a very important role to deliver a very good quality products to the buyers. And also number 11 is the governance. Okay, the real estate law for this federal district zone and whatnot. Okay, so we must know, we might want to buy an industrial, we might want to build the industrial property in this particular area, but the government might not allow us to do that because the zoning is not such. So there is a lot of things that we need to look at. So we also need to make sure the governance is also taken care when we want to do this development. All right, so this is our testimony, if you guys can see, on this 6 strategy that we normally use. Okay, we have actually used this in many countries. All right, for example, this land acquisition we have done in Hong Kong. Okay, in property construction and also property development, we have done it in Indonesia, in Malaysia, and also Australia. And for property management, we have done this in Mutiara, in Subangtu, in Malaysia, in Dubai, and also in UK. All right, and for renovation, we did in US, so basically buy a rundown property, renovate and sell back for very good return. And for refurbishment, if you guys want to know, in Germany, there's a lot of heritage building. So basically, the government is actually even giving tax incentive for those people who want to do rebuilding. All right, we have quite a lot of projects that are done in Germany as well. And like I said just now, the redevelopment, we also have this in New Zealand. Okay, in Christchurch, New Zealand, after the earthquake, we went in, we did a few projects over there, and it was all very successful because there was a huge demand there. All right. Okay, and then this is a little bit tips before I end the presentation, a little bit of tips on what kind of due diligence that you as an individual can do, how to invest into company. All right, so a few things. First thing is who, the key person in the company registration. All right, normally you guys can see I will be a spokesperson of this particular company. They'll come out and talk, but when we go and see the SSM or the company record, the person name is not there. Okay, these are the things that we normally look at. And then, is it Googleable? Googleable means what? We go and check their profile at LinkedIn. Do they have the background check or not? What kind of track record of them building companies? And what is their vision? Character of the founder. Okay. And then the key management team. Okay, sometimes it's not only the founder. We also have to see the other key management team, whether they are qualified or whether they can build the company to a bigger level or not. Okay, and then how many years experience and also auditor report, and any reputable person or institutional involved. What does this mean? For example, if this company is fairly young, but a big institutional company actually investing in them. Okay, for example, like Grab investing in them, or maybe SoftBank investing in them, or maybe Khazanah investing in them. The company is still small, but a lot of these big institutional coming and invest in them. So we can actually write on this big institutional due diligence. Okay, that is what it means. Okay, and second one is what. Okay, what is the business model? Today we have looking at sunset and or a sunrise industry. Today, if somebody says, I want to come and sell a fax machine. So is it a sunrise or sunset business? Okay, or another person come and say, I'm going to do a DNA technology business, or maybe a AI technology business, or maybe e-wallet or e-money business and whatnot. So we can see whether it's a sunrise or sunset industry, okay, by our understanding. Another thing, this is the second one actually, is very, very important that normally we also follow, whether is it sustainable or not. Okay, some companies, some businesses might need too much of fund for them to grow, but it might not be sustainable in the long term. Another thing is scalability. Sometimes some of the businesses might need too much of money into the business operation, and they don't have enough money for them to do for marketing and whatnot. Or maybe they're too heavy on asset, so they're a little bit slow for them to build. Okay, and the third one is social responsible. Okay, socially responsible means we want to make money, but then we want to make money responsibly. All right, means we want to invest into businesses that actually have an impact on the public and actually bring more good into the public. Okay, and then the risk and reward. Okay, you guys can also say high risk, high reward, right? Sometimes, right, we can go and look for those projects with high reward, and then later we go and negotiate the risk further. Okay, also can be done. And also the tax part of it, whether it's a highly taxable business or not, and whatnot, whether it's suitable for us to invest, is it worth taking the risk or not, and whatnot. Okay, and where is the existing business operation? Okay, whether is it too far away from us, or is it in our place? Okay, when is the place in the business is near to us, we also can monitor. We also have the better understanding on how the business goes as well. And another thing is the when. Okay, when is the exit? Whether the exit plan justifiable or not. So some people are willing to give higher return, but the exit is late. Okay, for example, I can give you 20% or 30% per annum return, for example, but you need to wait for 20 years or 10 years. It might not be justifiable for us. All right, so we actually can manage the exit, make sure we are getting the right exit plan for us. Okay, because for young people, a little bit longer exit is fine. But for people who are more than 40, 50 years old, a longer exit might not be suitable for them. Okay, so we have to do our own due diligence to be able to know whether it's suitable for us or not. Okay, and then the last one is the how. Okay, how the capital is actually injected. Okay, so basically today a company can go around, look for funds. Okay, and sometimes they might need the fund to pay off the debts. Okay, so when we pay off debts, whether the paying off debt will help the company to grow or not, or they might need money to do more marketing, or maybe they need money to pay salaries, or maybe they need money to buy more machines, or maybe more transport and whatnot. So we have to see whether the capital injected really can help the business or not. Okay, so I hope you guys learned a little bit from this sharing from us. Okay, and I hope you guys are learning, and I really hope to see you guys soon in our presentation. And thank you very much. Okay, anyway, hope you guys stay safe at home and take care. See you guys soon.